Hi, and thanks for checking out December's Northern BC news for real estate investors. There's been a lot of news that's gone on here over the past month, and one of the biggest themes has been what's happening with oil. Many investors have asked me what's going to be the impact of lowering oil prices on the real estate market in Northeast BC. And where I figured I would start is digging a little bit into the past to see if there's a correlation between what oil prices have done over the last decade and what real estate values have done. I'm going to pull up the chart here. What you're going to notice and probably conclude is the same thing that I've concluded, that there really hasn't been any correlation at all between what's happening with the price of oil and what the real estate market's done in Northeast BC. This is particularly clear when you can see a big drop that we had in 2009, that it had very little impact on what was going on. Now, there was an article that came out this week that wouldn't surprise you then, that concluded the same, that the lowering oil prices don't really have that much of a negative impact at all on BC's economy. Now, many very smart investors then tell me, Justin, you dummy, Northeast, of course it doesn't have an impact on Northeast BC. Northeast BC isn't driven by oil prices, it's driven by natural gas prices. So I said, oh, okay, well, let's dig into this as well. So I went and I looked at the natural gas prices over the last 10 years and compared them to the real estate values. These real estate values I used are in Fort St. John. Shout out to Trevor Boland for giving me those numbers. He's a realtor in Fort St. John. But the same numbers would apply to Dawson Creek as well. But what you'll see, so very surprisingly for many, is that there's very little correlation between what's happened to the real estate market in Northeast BC and what's happened with the natural gas prices. In fact, over the last 5 years, there's grown an increasing gap between the real estate values and what the price of natural gas is doing. And I think if we can dig down to the main reasons why that is the case, why this market has been so resilient and robust in spite of oil going up and down and the price of natural gas going down, I think the answer to that will really help you understand what drives the market in Northeast BC and help you understand whether that might be a good place for you to put some money. So with that being said, let me share a few reasons with you that I believe that the market's been so resilient in spite of these low prices. Number one, the economy is much more diverse than many people think. Mining, the last time they checked it, mining and oil only accounted for 16% of the employment in Fort St. John. I use Fort St. John again because the statistics are a little bit easier to get, but it would be very similar numbers for Dawson Creek. So you look at this, and none of the top employers are oil and gas companies in these towns either. So these towns have a lot of they have a lot of forestry. They actually produce over 90% of BC's grains, and they also have a pretty robust mining sector. So you look at this, and it surprises many people that oil and gas don't make up more of the economy as it does in some other oil and gas towns, especially in Alberta. Number two, I believe one of the main reasons that this area has been so resilient in spite of the very low natural gas prices is that it's one of the least expensive areas to drill for natural gas. And part of the reason for that is when you drill the natural gas in and around Northeast BC, in many of these areas, the gas is what they call liquids rich. So when they get the gas out of the ground, in addition to the natural gas, they're pulling out these additional liquids. Those are butane, propane, condensate, and these liquids can sell for as much as the natural gas itself. So what that means is that in spite of the very low natural gas prices, companies can still turn a profit drilling in this low price environment. And what that means is they can still bring in people into the area, afford to pay them well, and what that's doing is that's bringing a lot of renters into the area that eventually are pushing up the real estate values. So between the fact that it's a very diverse market and it's a very low cost market to drill for natural gas, I believe that makes it much more stable than a lot of people think. Second of all, natural gas consumption domestically here in Canada has been increasing. So many of you may have heard or seen a few of the articles over the past months that number one, BC is going to be converting 2 of its ferries to LNG. Number two, in Delta, there was a $4 million expansion plan where they're going to increase the ability to create LNG by 8 times and over double their storage capacity. And these are going to be used for transportation. So trucks and shipping companies and the likes are now switching over to natural gas because it's a much less expensive fuel. And number three, you may have heard a little while back as well that Dawson Creek is going to have an LNG plant right in Dawson Creek. And what this LNG will do is will get loaded up onto trucks and shipped up to northern communities to run generators. And right now the generators are using diesel, which is incredibly expensive. So this will be an extra cost savings for them. And all of these things are driving increased domestic use of natural gas, which again makes it a much more stable place to invest when you're not just relying on exporting natural gas to other countries. Now, why we talk about LNG is because it's one of the big opportunities for future potential growth, even though none of it has really happened yet. It hasn't driven any of the past growth. Now, this is where the price of oil comes into play, because when big oil and gas companies take gas from BC, they ship it over to Asia, the price that they sell it for in Asia is tied to what the price of oil is. So if the price of oil goes up or down, the price of LNG goes up and down with it. Now, what the concern for some investors when the price of oil drops then is that it makes these LNG plants less likely to move forward. And I don't believe that there should be as much concern out there as there is. And there's a few reasons for that. Number one, these LNG companies have very long time horizons. It doesn't really matter to them what the gas price is today because they're not selling the LNG today. They'll be selling the LNG in a minimum 5 years from now, 10, 20, 30 years from now. So what their big concern is what is the price going to be at the time that they actually have their product on the market. Number two, one thing that many people don't think of is that when a foreign oil and gas company comes and purchases gas in BC, they actually own the gas in BC and they own the company that's buying the gas. So when it comes time to purchase the gas, it's almost like they're taking money from one pocket and putting it into the other. And what that means is that they're a little bit less susceptible to the volatility in the prices of the LNG. So for those two reasons, I believe that what's happening today with oil shouldn't be as concerning for these plants moving forward. And actually the spokeswoman for Chevron says exactly the same. She says, current oil prices are neither delaying nor halting the Kitimat LNG project. So you don't have to just take it from my mouth here. This was said here very recently in the last couple of weeks as gas prices have been plummeting. Sorry, not gas prices, oil prices. So many of you may have heard the news recently that Petronas is going to take a little bit longer than expected to make their final investment decision. And again, what Petronas has said through the media is that part of the reason that they're going to take a little bit longer is because the price of oil is a little bit low. And if you go and read what many of the economists are saying, they say that it's a little bit of a negotiating play. And I happen to agree here. So I'd like to share a few reasons as to why I still believe Petronas will go through as well. I've written them down here. So number one, this isn't the first time that Petronas has threatened to pull out. Many of you a couple months ago would have heard the last time that they threatened to pull out as well because the tax regime in BC was too high. Well, the BC government responded and cut their LNG tax in half. So it worked pretty well for them last time here. And what I believe is that they're just doing the same thing over again. If they say that, maybe they're not going to go through anymore, they can go and squeeze their suppliers a little bit more in order to lower their costs. And in fact, that's exactly what they're doing. They're talking about lowering the prices for the pipeline the contractor that's going to build the pipeline and the contractors that are going to build the LNG plant. And they're also lobbying the federal government for more tax relief in the form of being able to depreciate their asset a little bit quicker. So it worked very well for them last time, and I suspect that they expect it will work very well for them this time, and I think it probably will. So we'll see. Number two, they've said that they're going to continue to spend $2.5 billion this year in drilling in Northeast BC. So if you really don't have any intention of moving forward with the project, it's a lot of money to spend if the intent isn't there. Number three, the CEO of the Pacific Northwest LNG plant, which is proposed, said that they still expect to make a decision here in the very near future. So that's coming right from their mouths. And number four, and one of the most interesting pieces of news, is that JAPEX, who is a partner in building Petronas's LNG plant, has already begun construction in Japan for the plant that will receive the LNG. So you'll add all of these things up, and I believe that we will have obviously a little bit of a delay, but I still have every confidence that this plant will go through. Another great piece of news this month is that Exxon has found a location for their proposed LNG plant. They're going to be in Prince Rupert. The city of Prince Rupert's also been on the ball. They've already rezoned the land to allow this to happen. It's great seeing Exxon take this step as it shows confidence in the market moving forward and in the opportunity for LNG in the province. There's also been a $25 million pipeline that was announced this month. This is great because a pipeline creates construction jobs, and not only does it create construction jobs, once it's done, you actually got to fill it with something, and that creates a lot of jobs as well. So this will bring quite a few people into the region, which will of course help us as real estate investors. So there's been a lot of news that's come out this month, but one of my favorite things about Northeast BC is that right now, even with what's happening right now in the market, you can get excellent cash flows. And I know a lot of people want to wait for big projects to happen here, but what I believe is that if you can get in right now at where the prices are right now and cash flow well with what's happening today, it's easy to be patient and wait for these projects to go through, be it an LNG project or Site C dam, and just collect your rent checks every month. And if those projects go through, great. But it's easy to be patient when you're cash flowing, because if you wait until one of those projects goes through, you're most likely going to be paying a price far north of what you're paying today. So I hope this information helps you. And if you ever have any questions, or if there's anything I can do to help, please comment below or get in touch with me. I'd love to sit down with you and see if there's an opportunity that we have that could fit for you. Thanks a lot, and I look forward to chatting with you in January, and hope you have a great holiday. Cheers.